Good afternoon, I'm Jennifer Christian and I work as a portfolio specialist in the investment management team, and I'm going to provide you with a brief overview of this week's market summary. The improving prospects for a US-China trade deal and an agreement to avoid another US government shutdown allow global equity markets to chalk up some pretty good returns this week. Donald Trump said last Tuesday that he is open to extending the 1st of March deadline for higher tariffs as the two sides are making progress on a new trade deal. Now, with regard to Donald Trump's border wall demands, although he will only get $1.375 billion of the $5.7 billion he wanted to build the wall, he was receptive to signing a deal reached by congressional negotiators in order to avoid another government shutdown. Now, while this would suggest he thinks an imperfect deal is better than no deal, he declared a national emergency on Friday in order to redirect funds from other parts of the government, which will allow him to build his proposed border wall. Now, we had a week full of data, and it has shown that a disinflationary trend appears to be setting in across the globe thanks to lower energy prices. In the US, headline CPI inflation fell from 1.9% to 1.6%, which is its smallest annual gain since June 2017, which underscores the Fed's recent comments on being patient with future interest rate increases. Likewise, in the UK, CPI came in at 1.8% compared with 2.1% in December of last year, while in China, CPI fell to 1.7% from 1.9%. UK GDP data showed the economy grew by 0.2% in the fourth quarter and 1.3% for the whole year. The slowdown was mainly caused by businesses cutting investment, and it could be argued that Q4 growth of 0.2% is actually very good given all the Brexit uncertainty. On the subject of Brexit, the media has been busy speculating that Article 50 will be extended after Ollie Robbins, who was Theresa May's chief negotiator, was overheard in a Brussels bar discussing strategy. While we think it is inevitable that Article 50 will be extended, we believe a Brexit extension will be of very little benefit unless it is accompanied by some meaningful progress on our future relationship with the EU in terms of trade agreements. Otherwise, we could see business confidence and therefore investment unlikely to recover, as pushing out a departure date simply prolongs the uncertainty. Now, that's all from me this week, and don't forget, if you haven't already, you can also read a more detailed insight into matters affecting the markets in the email.